Okay, we are live. Prospero.ai stock market live stream. We have a lot of exciting topics to talk about today, and we're going to finish off with the model portfolio update. We left off on Monday where George flipped his model portfolio from, I would say, you were leaning bearish to basically you went heavy bullish, and you could speak about that more. But seems like your call for the stock market this week was a very good one. But I'll let you talk more about what you saw and why you made your moves.
We never get sick of being right here, Steven. uh, but yeah, like obviously the types of things I was saying, like sometimes it's not that difficult what I'm saying. Like honestly, I was like, we see a resurgence in QQQ net option sentiment. It was highly predictive last week. Why wouldn't I when I'm essentially saying like, hey, we've started to see this turnaround, be predictive for the rest of the market. It's turning around even more. I'd be pretty dumb to just ignore my own advice that much, which is just like, hey, this is looking pretty predictive. Let's give it that credit that it's looking predictive. And yeah, if there's one thing about me, it's just like that I think pretty much people have learned about it is like, I have a general policy of just slowly moving things outwards, right? Like changing my portfolio slowly every day, just tweaking it. Unless I have like a clear conviction, clear indication. But yeah, for those that get our letter or that watched earlier in the week, I've never switched around the portfolio that much. I dropped, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 shorts. And I added, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 longs. So yeah, that's a pretty big flip. And in the past, I've definitely dropped a whole lot. Like people who have watched this a lot see me just hack off the least good parts of our signals in long or short, just to quickly just get rid of the losers if I'm inclined to believe that the market is changing. But yeah, that's definitely the first time I've ever just taken a buzz saw to shorts and then added longs. It obviously went pretty well. At that time, we were sitting at about 22% above the market over our 603 investments, and now we're looking at 27. And just to be clear, now that we're talking about 600 investments, the more we have, the harder and harder a good or a bad investment is to actually move the portfolio. So yes, we've had a very, very good week to move it up 5%. Um, and so yeah, I mean, that's what we do. That's what we do all day long. Like, um, it's very important for us. Um, it's very important for us to do that kind of thing, to practice what we preach. And if we're seeing something and I think that's an important lesson that we kind of always say is that practice what you preach, but also you know, set up yourself for success by saying something like, hey, we're starting to see QQQ net option sentiment turn around. If that pattern continues, we will be very bullish. So the more you can even set up frameworks like that, where you're making it obvious for yourself, that's kind of where I started out by saying this. Yeah, I set that up. I told myself if I saw that trend continue, both because QQQ net option sentiment had been predictive last week and, it was telling a general story of an even more bullish turn, even though there was a bearish week. It's very easy the more, and obviously I'm very experienced at doing this, just setting yourself up, for those kinds of wins where you're just I'm looking for this. If I see it, I already know what I'm going to do. I'm going to tell you what I'm going to do. And that's just the way to become a better investor, trader, or whatever. And that's also my experience in data science has taught me a lot about that. That's also literally what good algorithms do in concepts called, machine learning, or the kind of layer after that, reinforcement learning, where you kind of grade yourself on how you do. All they do all day long is that just be okay, this is what I understand about the world. This, if it goes in this direction, this is like what I would predict to happen after that. And then you just get better at looping that. Um, and it's kind of really funny. Like in my life, I talk about like, how like, my friends or, people I work with, I talk about like how like I have an optimization algorithm for dealing with them. I talk about like having like a cooking out, like my flavor algorithms. I cook a lot, and I even like make some of my spice mixes. And I talk about, and it's like kind of funny, like that I will like do that, and I'll be like, no, like I've smelled enough spices that I know what it's going to taste like on the other end, and I can make spice things there. But it's actually pretty important. Like actually, like one of my data science friends called me out at some point. I was like, oh, you can't really do that, and they were like, well, actually, that's not true. If you're logging both the inputs and the outputs, like that's all your brain actually needs to learn and improve, whether or not it's learning and improving. Um, so yeah, I think that that's all to say. Like, it doesn't matter what you're doing, like beyond just investing. Essentially, if that process involves thinking about the inputs, like being honest about the outputs, and especially like reinforcing things when you do that. Literally reinforcement learning. Like, if you're really thinking about like that whole process, whether it's conscious or like you're like like obviously everybody says like you use like a small percent of your brain, your subconscious is doing a lot of work, whether or not you're learning those lessons constantly, like consciously, your subconscious is learning those lessons. And like setting up problems like that will like like the point of this, not only make your life a lot easier in situations where like nothing's better for me in investing when I don't have to think or worry very much. Like, we spent the whole latter part of that like live stream with me just being like, okay, I want to close out a bunch of shorts and I want to open up a bunch of new longs. And like, I didn't have like a lot of the times, when I'm less clear, I'm much more like dainty about it and be like, oh, I'll look for a couple new shorts and a couple new longs. And I may want to like add and cut like equally because I'm not as sure. And and part of that is some trepidation in the back of my mind that I might be wrong. But the more that I'm just like pre-settling things for myself, like in the way that we're just basically talking about, where like I had this expectation that if QQQ net option sentiment continued to go up, it was going to mean very good things for tech stocks. The more that I'm just like completely setting myself up to have a very easy time and then have the much easier task instead of like wondering like how aggressively I should pursue a strategy, like knowing I want to pursue it. Um, and then just like the mechanics of pursuing that strategy are way easier. Like, not only just like if I know what I already want to do, but if I don't have anything in the back of my head, like saying like, hey George, you could be wrong about this. Like, it's way easy for me to just like pick the stocks and like get on with my life, and even do something like completely change around the makeup of a portfolio in a short live stream, because like I don't really have to think. A lot of the longs I was throwing in there were just like, sure, whatever, I'll throw it in. I think the market's going to go up. Like, who cares if I'm a little worried about like the 1 hour technicals on this? Like, I think the market's going to go up, and that's not going to matter very
And if anybody in our chat and viewing this on Twitter or YouTube was here for that stream, please comment and like the video if you got some value from that stream we did Monday. Our next topic is something that, there's a lot of hype and news around. So the Bitcoin ETFs are expected to be announced today, and like the SEC is supposed to approve it. But yesterday, after the market closed, the SEC Twitter account or X account fired off a tweet saying that all like Bitcoin ETFs were approved, and then the chairman Gensler, like minutes later, tweeted that their account was hacked and that's actually fake. And then some people today were wondering if they're actually going to go ahead and still do it, because it kind of looks like funny after the day before they get hacked and they're still going to go ahead. But how much thought are you putting into this Bitcoin crypto ETF stuff? And actually X came out and said that their account wasn't hacked by like, real technical. They just didn't have 2FA turned on. So, the SEC.
much. Yeah, like, oh, like that was an accident, or like a Panamanian bank account owned by Gary Gensler like made a pretty aggressive in and out trade like around that announcement. Like bottomed it and topped it out. No, I'm just kidding. Like I am not suggesting that about Gary Gensler. To be clear, that is a joke. But that is a joke, but it's also the problem with crypto that like we all would have no idea if that was actually like a hack or whatever, or like someone accidentally made that post as they like made millions abroad, or got like some or got like a flash drive with $10 million in Bitcoin to like make that post. You know, we that is the very problem with crypto, is that the way it is set up currently like creates a haven for criminal activity. And like I'm actually always quick to point out there's some people that I've talked to that are kind of like, I would say, more traditional thinkers that are always just kind of like only criminals use like the blockchain or Bitcoin or whatever. And like I'm always like I tend to be pretty fair on things and balanced, and to me that's too far. Like there are plenty of good, honest people in crypto, but I think that's the best way to say it. It is too much of a haven for bad actors, and like if you have a haven for bad actors, you are going to get a lot of bad actors, and that's just like and that's the problem. I'm not suggesting anyone at the SEC was engaged in any like malfeasance around this. But what I am suggesting is like, as the public, we have no goddamn idea, like for sure, one way or the other, if there is malfeasance or not. And like, you will get more malfeasance if that happens. That's just like the bottom line. And like, for all the complaining about the market as it exists today, like, we absolutely do have a lot more indication of whether malfeasance is occurring or not. Like it's not perfect. There's no markets that prevent any kind of malfeasance. And like it's always like complete crock of shit that people like are expecting that. Like we're no sooner gonna see like a complete lack of malfeasance in the markets than it's just like, yeah, like let's talk about Monsanto. We're talking about like corruption in the Supreme Court every day. Like it's just like why people like expect like literally the place where the most money is made to be devoid of any malfeasance while they accept it in this other institutions is like lame, idiotic. I could come up with a bunch of other superlatives about it. But like, yeah, like don't be stupid. Like until you're ready to like complain about literally every other like piece of malfeasance that we constantly face in society, like why you are signaling out like the place where the most money is made to be devoid of it is just dumb. Sorry, it's dumb. Oh,
Agree.
I posted some questions here. Um, I have just been like, I have just been facing like a hellish couple weeks in terms of like not even outside my job, just doing way too many things. I owe Bruce some responses to these questions again. We'll do another Bruce question where that actually works really well, and I can actually probably answer better than I can in an email. Um, and this is kind of like an extension on that. So to answer this question, Bruce, I would say that smart tech people have found ways to expose or benefit from expose like opaque crypto markets. And that's kind of the point. Like that it does require like a lot more technology, expertise, relationships, etc. to even like start to grab at what's going on in the derivative markets in crypto and the levered markets, these like levered cryptos, these options bets, all that stuff. Like, when I asked the largest crypto hedge fund if they had like if they knew about everything that was going on there, they said no. No one knows everything. And that was like pretty much what I expected. That does not mean that they don't know like orders of magnitude more than I do, than any retail trader does. So, like, yes, that that is that's the opaque part. Moving on to like, that it does exist. Part one. Like, yes, like they do expose them, they profit off them. Um, but uh yeah, I don't know what is a scam. But I'll get back to that later. Um, but uh but yes, basically like that does happen, but that's kind of inherently the problem. That these funds that are like exposing, it's pretty much the opposite of what Prospero does. When we like find like mispricings in the options markets and we just instantly make that transparent. Like what these large players are doing is profiting off those like mispricings. Whatever like the technical term for it is information asymmetry that these places have. They're not sharing it, they're profiting off of it. And like when we talk about information asymmetry, we always use like we talk about how someday, one of the reasons Prospero's product is free is that someday we want to be able to offer like a high yield savings account to anyone that's like backed by like hedge funds that are trying to get access to alpha that we guard with our community that flips the script like to advantage retail investors over hedge funds. So like the example of information asymmetry here is that like when uh US senators were basically using hospital data to, what reassure the public that everything was okay with COVID to while they shorted the market and made a shit ton of money. Like that was them privately capitalizing and in a pretty immoral way capitalizing on information asymmetry. And that's pretty much all any hedge fund does. We talk about Steve Cohen and like how he had his like, interesting and ultimately ruled illegal research processes for these stocks. That was him acquiring information asymmetry. And like what Prospero basically wants to do is in partnership with retail investors and give away all these awesome free products to earn trust to one day together eliminate information asymmetry when we've earned trust. I don't know if that starts to get at your answer in terms of like do this and it's a scam. Like I assure you this is not a scam. We're pretty much the opposite of a scam. But you can ask follow-up questions if you'd like. But to nail down the next question with Bruce, which is just like, and trades you use my big players on dark pools, like in our literal help section, what we say about dark pools is like no one actually really knows anything about them. Directionally, you don't know crap. Like what you do know when there's a lot of dark pool activity is someone cares about like not moving the price of the stock so much in like by making a market transaction that they're trying to make these off market dark pool transactions. They care about not moving the price so much that they're actually frequently paying a premium to not do that. And like we talk about with like option sweep orders, like that's Wall Street paying a premium of buying like one particular contract expiration strike to like make sure that they send you a message that they're buying that so they could basically like actively manipulate anyone buying that and making them like tack on to whatever trade they're doing. They're paying a premium to do that. So like how does it about the data reuse? It's very much in line with that, which is just like we warn people that when you see dark pool activity, it means you're not like whatever it is, like you're not getting like the market price of something, or you have people basically like intentionally telling you they are trying to mask the market price of a stock. Um, which is why, we tend to like a lot of the time steer away from high dark pool, whether you're going long or short, because like what we advise on dark pool, like a lot of dark pool trades, a lot of dark pool activities, and one of the things that we do like that's pretty unique in our dark pool rating is instead of just what a lot of people do, which is like percent traded on the dark pool, which is a lame metric. Because like all the time I see like 80% traded on the dark pool for a stock trading like a meaningless number of shares, which is like, of course, if an institution wants to like, trade 90% on the dark pool for a stock that transacts 50,000 shares a day, it's really easy to do that. It's a very different problem when you want to do that for, say, Apple stock. Um, so that's why when we look at dark pool, we look at, percent traded on the dark pool, as well as shares outstanding, volume trends, So when we give our dark pool rating, we're actually feeding you a number that controls for the size of the company, the amount that that stock churns relative to the total outstanding shares. So that signal, like a lot of signals that we talk about, simplifies while making more information rich. And that's what we tend to do in all of our signals, like add value while we simplify and scale. So yeah, I would say that like that's a very easy way. Like we're not inferring one way or the other, like what high dark pool rating means, whether the stock is going up or down. Um, we're just saying like you probably want to avoid it. You probably don't know the real market price of it one way or the other because you don't know when someone doesn't want you to know the market price if they actually think the price should be higher, they actually think the price should be lower. You don't know which direction they're trying to avoid pushing it. So that's why the advice that we're giving you with high dark pool rating is the best advice you can get. Just like I would avoid high dark pool rated stocks. Like either way, I would avoid like at the very least, I would avoid any kind of assurance that you know the direction that it's going. Like it's not a bad idea if you're like a more complex trader and you're gonna like bet on volatility. So buy like a put or a call, bet like short and long that you profit basically if the stock moves a big direction either way. Like that's not a bad thing to do with high dark pool. But unless you're dealing with trading of that level of complexity, I would say avoid high dark pool stocks. And to come all the way back to crypto, that's pretty much what we're saying with our general advice in crypto. You should assume that any crypto you're dealing with, and the more like altcoin it gets, the bigger this problem. You probably should treat it as if like Prospero has over 100 rating on that crypto because like those are just much more opaque markets. And in more opaque markets, we give you the same advice as we give on dark pool, like high dark pool rated stocks, stay away unless you're a really big expert. Because, like, I would consider myself a pretty big expert in stocks, and I see high dark pool, and I'm like, George, you should probably stay away from that. Like, I literally will, like, when I'm making those filters, like, subtract it out, control for it, like when I'm picking stocks, a lot of the times I'm literally filtering those stocks out. So I'm not even looking at
So the CES conference is going on right now, which is one of the biggest tech gatherings in the world. There's a lot of AI announcements happening. We talk about AI all the time, but it's the usual suspects of like Microsoft, OpenAI, Google. But I thought it was really cool, and Microsoft is involved with this, but Walmart announced that they're going to be using AI to help shoppers search for items within Walmart. And I think this is my hypothesis. You can tell me if I'm right, but I think people may be underselling how much AI can help like non-tech traditional businesses. Because when you think about a company like Walmart, right, they do hundreds of billions of dollars in revenue, but they have such thin margins that if AI can produce like help their margins by 1, 2, 3, 4, 5%, that's billions and billions of dollars that without like the help of AI, there's really no way to get that margin increase. So do you think that like non-tech companies will be helped by AI, like Walmart is saying, like
that.
what I'm saying?
Steven, I hate to do this to you sometime.
Do
But
it,
you're
do it.
missing something pretty big with that question, where it's just like uh Walmart was one of the first like AI companies. Like no one was calling it AI then, but they for years, like, how do you think they got the best supply chain like that has been known to man before Walmart? I mean before Amazon. Like they pioneered like an intelligent supply chain when like literally no one else could figure it out. And like they also had systems to like pressure their suppliers to basically say like we can optimize prices lower. We can push them to give us this discount because they know exactly how much money is made like on that supplier with their other customers. And they just like they were similar to Goldman Sachs in that way, where we're just like, don't make a deal with Goldman Sachs. Like they had so much pricing information and information on their competitors and like they combine that with like very smart algorithms, a very smart system that like yeah, they've been like an AI company in terms of like, and I put that in quotes, like they're an AI company in the sense that like any machine learning company now calls themselves an AI company or says they're using AI or whatever. So I think that's distinction one. Like they've been an AI company in the way that like I would say 70-80% of companies describe themselves as an AI company for maybe over 30 years. That's thing one. Thing two is like now, like AI, like now you just get a bump for like even like saying generative AI in your, conference call. So they've got some of that going on, like 1000%, where they're just basically like, hey, I bet if we say generative AI a few times and maybe like engage in some of this, like some of R&D around it, like our stock will go up. So like there's definitely a lot of that going on. But that is all to say, after beating you up a little, I think your central thesis of like, uh, you know, are more traditional places like, should they get more involved in AI? Could they be helped with AI? Like, yeah, maybe. Like, especially if you're talking about like, I think you're actively an idiot if you're not saying AI on your conference calls now. You're basically like turning down money in your stock price. Like, I don't care what you do. If you're not saying like, even like, hey, we're thinking about rolling out this new generative AI thing, it could be customer service on your website. It could be like some kind of HR optimization tool, blah, blah, blah. There is no business that shouldn't be like talking about ways they're going to like integrate AI into their business today. Um, that's thing one. Thing two, I would say, is that it's just like on the complete other end of that, there's a lot of businesses that are just like completely unqualified. And like I would say CEOs, managers who are so behind the times on like actually like what technology is. And I'm gonna pick a fight with the New York Giants here again. Cause like I played a role, like I have for years taken them to task over like there was a big fight that actually exposed that I had online way back in the day, where I exposed just how bad they were at data science, and just like basic math. Where I was at a game, like it was a Saints game, like many years ago, where they completely like screwed up on their timeout usage, and like it's like something as like a very advanced game theorist was just so obvious to me that they didn't understand basic game theory. Like what I said is like I could build a program in an afternoon that would tell them like how like there was a 100% chance they used those timeouts wrong in terms of like what has become more popular in that port expected points added. And there was a big like who the fuck are you like on this message board when I said that, and it's just like, and actually like a poster that I really like there, like coined this expression after that. It's like they could have like they could have buses full of PhDs in the parking lot. Like it wouldn't matter. If anything, it's stupider that they hired those people and they can't even figure out like how to apply some basic computer science and game theory. And that was like the funny thing. It's just like, no, you idiots that are like questioning like how I would know that they're stupid and they don't have anyone that even understands math. Like, don't understand math. Like, this is basic shit that they just get wrong. Um, but anyway, what I would say, I was proven to be very right about Dave Gettleman, and like the New York Times is about 2 years behind me in calling out like how just like really stupid they were in terms of understanding, like I would say, game theory, math, computer science, organizational psychology. Like I would say, where they don't even understand, where it's just like, no, I don't believe a team with like a CEO that is like that immature and like quite frankly stupid, like could ever even understand that no talented tech person would ever work for them. Like, it's just like, that's how I know because, like, I know every talented tech person that I've ever spoken to really cares about, like, the buy in at the top and if someone can actually understand the work that they're doing, which, to be clear, there is no one on the Giants that actually, like, I have any degree of confidence would even understand what good data science looked like if it smacked them in the face. But I am coming full circle on that, which is just like there are plenty of businesses that have like a John Mara equivalent, like running their organization. And those people probably shouldn't spend a dime on AI because they would have no idea on how to use it. They're probably going to be burning through resources. They're probably going to get scammed. Like what I would suggest is those organizations wise up real quick and hire like a real CTO to do that. Because the rest of that story is like there was basically like, oh, they have this like head of analytics and innovation. And I like looked at that guy's LinkedIn and his history, and he was basically like a McKinsey consultant that had worked in Excel and never even used a database. And you're just like, how do you know this guy can't do the job? I was like, because I don't, he hasn't even had any experience using a database. Like, if you don't know how to use a database, a relational database, like especially like a distributed database, like you don't even have the basic building blocks to understand like what you need to do to build a system that would actually like work well. And I think that that's like that gets to be the core problem of anything. And I've like increasingly seen like people complaining about AI basically with that critique. Like, oh, like these idiots talking about AI at my company clearly don't even understand what it is or how it works. And like, yes, those people should not be spending any money on a technology they could spend 5 years like learning about tech and still not have any really understanding of like how to use it, what a good price is, how to integrate in their business. And really the only solution in those businesses is new management, to be honest. That is the only solution. Like, but that's about resource efficiency. Because like as much as we're talking about like, yes, all of these old businesses do need to be modernizing, like if you don't have the right like innovation mindset, if you don't have the right management, you are just going to be burning through funds um in even your attempts to innovate.
Well, I'm happy you brought us into the sports world because that flows in right into our next topic very well. So, Fanatics, which is like a collectibles company, and they're becoming very powerful in that space. They've done a lot of acquiring over the past, like, since really NFTs, so maybe like 2021. They just announced a deal with LeBron James. He's moving to their collectible. He's leaving Upper Deck after 2 decades with Upper Deck, and he's joining Fanatics. The deal is estimated to be about $5 million per year. um, this is a cool story, but what I really wanted to ask you is we talk about stocks, all the time, and obviously we love stocks. But if there was any alternative investment, whether it be art, collectibles, some other kind of investment that you like doing or you think could actually make people money as like a side thing, what would you choose or what do you like?
um Art, like, yeah, if you have hundreds of millions of dollars, art is great. Fractional art is like bullshit. Like if you can't control like when it gets sold, like who's controlling it, like the deal structure of that, like quite frankly, I don't even know if you can prevent yourself from just getting completely screwed in these deals when and if they occur. So art, no. Like one of the things that like I think fractional real estate can be interesting depending on how many people you're buying it. And like, liquidity is super important. Like, basically, there's investors I know, very smart investors, who they only care about liquidity and optimizing liquidity. And basically, liquidity is like how easy you can move in and out of things. So like they would only evaluate alternatives, like if they're highly liquid. And I'll tell you why like liquidity is so very important. So like if you're talking about like private equity is like some of the highest returns, famously illiquid, or even like startups, even more illiquid because there's like such a high like thing, and the returns are great. But private equity, you're getting like much higher returns that anyone would really kill to get, but very low liquidity in terms of how easy it is to get your cash back, whatever. And like honestly, as I've talked about like crypto, for example, to bring it back to an earlier thing, my biggest problem with it is like ROI, time value of money, etc. Right? If I am super confident, like my average investment length in the model portfolio, let's see, is 26 days, right? If I'm really confident in my ability to get, above market returns on a constant like 26-day churn, like something like crypto that even I can acknowledge, like, yeah, you hold it for 2, 5 years, like I think you'll be pretty happy. Like ROI, I think we talked about it last time. The more you churn, the more money you're making. And like I think some people will like, yeah, I could make 50% in 5 years. If I hold some altcoin, right? But two things. One is like you are getting tremendous downside risk to make that 50% that I am not getting in my highly liquid, stabilized investments. That's thing one. Thing two is like 2 years in a row, I just made 50% on that. You compound that over 5 years, and like my less risky investment is crushing your 5 year hold of that crypto. And I think that's what some people don't understand when they talk about that kind of thing is like actually my biggest problem with crypto is the time horizon on the investment and how much I can churn like other less risky investments over that time period, not crypto itself. Like that's the big thing that I think a lot of people don't understand. They're just being like 50% over 5 years, like anyone would kill for that. It's like A, not me. Like B, like you're taking on like a lot of risk for that 50% that you don't even understand because you're just gonna like think in the outcome. And if you lose 40% on that, you're just gonna like tuck your tail between your leg and like blame other people. But you're only gonna talk about that investment if you made 50%. Um, and that's just like a really big reporting problem that we always talk about. Like everybody that's talking about themselves as an investor is always the best investor. But the facts are 90% of investors lose. So that's a real sampling problem when you think about like how many people claim to be good investors and these great things that always win and what the hard data from the brokers say about like how successful investors actually are. So that's the big thing. Like, especially being aware of Prospero and like what we do. Like, if you'd like to take on risk, I suggest you start buying like a lot of the things I put in the trading letter and announce here, like that are going to churn through and make much more money that like, are going to be far less risky than buying that altcoin or that levered like thing, levered like Bitcoin thing. That it's just like, and the big thing to really close the loop on that is like understanding your risks are the most important. And basically, like what I said about like some like actually like Bitcoin braggers, like or like braggers the other day is like you don't brag about taking risk. And B, like you don't even know your risk. Like you don't tell me for a second that you know, and this is very important, the odds that um the SEC approves the ETF. I'm not saying like I would call it, probably more likely than not likely, but it's not like blackjack where you know the odds. If you don't know the exact odds of something, you would prefer an investment where you know closer to the exact odds than the one you don't. And that's the problem with, risk is that most of the time, if you can't well define what the risk is, you are taking on more risk than the other people. Because the bottom line is the people that should be betting on Bitcoin right now are the hedge funds that, like we talked about earlier, understand the opaque markets more, have government contacts of their own, have better information than you on whether this is happening or not. Or you should go find an investment that you actually have closer to the same amount of risk on that on as like than like Apple. For example, like everybody's dealing with pretty similar information on Apple. It's extremely liquid. It's not like the most volatile stock. We all understand the products very well. We all understand pretty much exactly what they have to do. There's not that much regulatory shit one way or the other that's going to move. Like, that is a great example of really known risk. And actually, that's one of the things that Prospero does, whether or not you know this, is like we try to make de-risked investments sexier. When we tell you how to time Tesla, all we're doing there is just being like, actually, you've got some really good upside if you buy Tesla right now, like relative to anything else and the risk that you're taking. because it's such a promising company long term. That's really all we're doing, kind of pointing you in directions where the risk reward is really, really good, as we doubled up on Meta for the first time ever in our newsletter picks this week. And we see it having a really nice day today. Like, yeah, that's all that we're doing. Not really rocket science here. We're just being like, yeah, like, and I know it's not the most like, I know overall just being like buy Meta is not the most like, innovative or unique idea, but the way we do it, where we're just like buy Meta now, like it all of like the risk reward on it looks really good. Like we've been like, how long have we been talking about SMCI? Like here, Stephen, we've been like shouting it from mountaintops. It's been our favorite investment. What? How much is it up? Like we should make a video on that where we like say like show like how we've been talking about SMCI. We take back to that because like yeah, in the last month it's up 30%. I bet we have a video of about a month ago where we're talking about, or you could pick it out of a newsletter where you're just like you're an idiot not to buy SMCI, and you're still an idiot if you don't buy SMCI. Like I haven't changed that much on it. Let's look at SMCI PE. Like let's go back to our favorite quote. Like what is like yeah, the SMCI 2026 PE forward PE has moved from like I think 0.24 all the way up to 0.34. So to give you a live look on how much of a better deal you're getting than 27, like yeah, so we're gonna give this live about what a better deal you're getting on SMCI relative to Nvidia on 2026 earnings. You are getting an 82 times better value on 2026 earnings uh, when you buy uh, uh, when you buy um, SMCI SMCI versus Nvidia short. Oh yeah, sorry. I wouldn't short either of those stocks. But yeah, let's jump in. We do have to do the model portfolio. Like we got to cut everything else. I got to jump back in. But before I do the model portfolio, I am very happy to take you through um, everything. So let's go into the model portfolio. Like the big thing here is like, and I always say this, I am actually much more proud of these model portfolio results because there's 603 investments, and that basically means like at that rate we're basically churning through 100 investments a month, which is absolutely insane. Like Seeking Alpha, you could pay for their premium picks. You could pay double than the trading letter to get 2 ideas a month. We are giving you 100 ideas a month. We are hitting at a 60% rate, and we are doing it at a better historical average um, than Seeking Alpha's like premium picks. So you are getting insane value from Prospero. But like, yes, we're doing a little more rapid fire. You'll see here in 3 seconds exactly how fast we do it and pick stocks on this. But then you've got this whole other like higher conviction, like 2023 newsletter picks. And that is like, that is 154 investments in a year. So you're talking to closer to 12 a month. So you're basically talking about a 10x churn on that versus on the newsletter picks. But like, yeah, you're still talking about a 60% hit rate. You're still talking about, but like, about a 45%, you're beating the S&P by more because like, yes, to be clear, these are higher conviction picks and these are also free. You can get these every week for free. We're hanging out to everybody. But here, like there's less picks. And like, as I mentioned, I'm using a lot more. I'm taking a weekend. I'm using a lot more value investing principles. So it's not surprising that that it has this higher like return. But like to the point about risk, like why I'm more excited about this 27% risk is like at 603 investments at that like heightened level of diversification, I'm getting a very like premium return above the S&P 500 while like heavily de-risking that for you guys because the amount of investments I'm feeding your way, there's something called like single stock risk, right? And it's just like one of the things we talk about with like a high market similarity, right? Is the higher you get to like 100 market similarities, say buying something like Google. Like the higher you get to 100 market similarity, the more you should just buy the market. Because it's just like, why are you taking around all of that single stock risk of like whatever could happen to Google's business, regulatory, Microsoft, what have you? Like, why would you take that single stock risk when in the end of the day, you're getting like a very similar like performance to the market, right? So that's kind of what we're saying here. Like we're removing even more like the individual risks of these portfolios by diversifying a lot more in the model portfolio. Does that answer your question? Let me stop sharing my screen because I hate that. Um, and I don't find where to look at the portfolios. Okay. So like I'm gonna do that. When you did, would you have a return at the end of the year? No, you wouldn't see. Like I'm showing, like if you invested in everything that I'm recommending, you would have like I will guide you through one more time. You would have a return if you did the model portfolio. You would have a raw return of 29.31%. That would be your earnings if you made all of these 603 investments. And you would that would have beaten the market by 27.29. If you just followed the newsletter picks, there's some nuance to timing, but I'm just like to simplify. You would have made 56% on the year, and this is even. You would have made on the 2023 if you followed everything I did. You would have made 56%, which would have been a 45% beat. Like to go into your like thing, Mauricio. Like I share the newsletter picks, the trading picks this way. Sometimes I share them in chats. Um, as you can see here, I share my chats. That's how you follow all these. If you a trading letter subscriber, keep in mind there's an investing letter or a trading letter. If you pay for one and not the other, if you pay for just the investing letter, you are only getting like access to those investing picks. If you pay for the trading letter, you get access to this model portfolio, which is basically like gets updated. Like not only do we have these like things where we say what we're doing, but then at any given time, you can get a live look into what we're holding and what we're not holding and what we sold. So you can always like catch up and see. Sometimes it's on a slight delay exactly what's in our portfolio, and you could buy this whole thing today if you want. Even though, like to be clear, I do not recommend that. What I recommend anyone does with Prospero, take a look at what I'm recommending and figure out what works for you and your strategy. Like copying someone's trades, if I haven't been clear enough to you already on this, is not a good strategy. You need to have your own strategy that I help you learn more about how to optimize. That's what you need to do. I never recommend anyone follows any trades. I suggest you learn from me, learn from what I'm doing, see all these ideas, and figure out how to integrate it into your process. That is the optimal way to not only use our picks, but any investment or trading information that you get. All right, now I have to update. Got to update. Barely like running out of time. It's okay. I think this was a very good use of our time, but now you're going to see if I can get this all done in 12 minutes. Oh, can you tell me what's going on? Ooh, we're definitely dropping that. Can you tell me what's going on with oh, that's actually looking pretty good on 30 minutes. What's going on with uh the market, QQQ, SPY, and option sentiment time series? Um,
QQQ is still at 44. It was at 42 at lunchtime, near the highs of the day.
okay.
The SPY is at 56. It was at 53 at lunch.
Damn, we are just like crushing it here. Mm, mm. We're gonna do our daily check. Whoa. Well, okay, okay, never mind. I thought like these are longs. I was like, that is way too high. I was like, I'm losing my edge here. All right. We got to breeze through these. That looks real good. Anything else? Damn, FMC. What's going on there? Wow, all of these are looking pretty surprisingly. Um, I think I do want to get out of Mist soon. It's just like I got a nice profit on it, and like we're losing now. It's just like just keeps sucking me back in, Mist. What's going on? It's Casa. Oh, down 10% today. Nice. Wish is actually like the most nightmarish stock where it's like very memey and like all the time. Like I see like net option sentiment go up as the stock is just like, yeah, like floundering. It's just like I hate meme stocks for that reason. Like we got to keep a close eye on that. And which all right, BOH is I think the only other thing we need to spend any time on. Yeah, that's looking good actually. Yeah, great. All right. So not cutting anything, making good time here. Any new results? 350. Yeah, I believe maybe I don't think we started this at 350. So we're here. I believe we are doing some mm, valuable time. I think it might be open already. Yeah, well. Oh, we already had it open. God, hate it. This is 350? No, it's 41. What the hell's going on? Maybe sometimes it opens a new one and doesn't tell us. Yeah, okay. That's right. Not going crazy. All right. So we have our. All right, let's see. Let's see if we can do this all in 12 minutes. We've got our gain, and then we've got our dark pool times 25. I really like this filter. It's been doing really well for us. Uh, what? What? I don't know what's going on. All right, where is the option sentiment? T O2. Oh, I see. That should do it. Yeah. This is not helping us cruise into an on-time landing. All right. Vulnerability. Oh, I think we did social sentiment times 0.5. I actually really like that. Okay, we're gonna do a nice little hack here. O2, and then we're gonna do social sentiment. Oh, so close. Oh, I hate that you need to make these bigger. It's being very annoying today. It's one of those days. I mean, we're probably not going to finish on time. I'm really getting annoyed with myself that I don't finish these on time. Because it's like not like we're not doing anything like immoral. Like if we like use like if we like slightly are behind the close price or whatever, like nothing moves that much after close. And like actually, the one time Airbnb did move a lot after close, I actually was just like, oh, we can't take the win like this. But I just am annoyed that we keep doing this late. Okay. I think we might want to buy. Can you tell me what's going on with PDD? We met Microsoft. Um, can you tell me what's going on with PDD? And then I also want
PDD.
to know if we have open. Yeah, like in Prospero. Also, let me know if we
Yeah.
have an open. Eli Lilly, I believe we do. But let me know
Okay.
that. Um,
Okay. PDD net option sentiment is at 89, upside 64, downside 17. It's near the highs of the time series graph in terms of net option sentiment. Upside breakouts also. They're all on upswings, upside breakout. It looks good.
All right, we're getting ourselves some more PDD. Okay, so now let me know if we have an open Eli Lilly and an open AutoZone.
Lilly, we do.
Okay. Look at this. You're getting better at this, Steven.
AutoZone, we do too. There we go.
Okay. I don't need to double up. I don't think we have. I don't think we have an open GWW or PH, but let me know.
For longs,
Yeah.
PH, we do.
Oh, okay.
I don't see GWW.
Okay. We're feeling very bullish. We might double up. Like I'm just more inclined to double up. Also, we only have one open Tesla position, right? I don't love.
Yeah, one Tesla.
I'm doing that even though the technicals aren't great. And one PDD, right?
Yep, one PDD.
You're getting great at this, Steven.
We might
Microsoft
make it on time.
Microsoft has burned us every time. I mean, we're going to be close.
Microsoft is 1% from passing Apple in market cap. I saw that today.
Can you tell us? Can you tell us if what's happening with PH net option sentiment?
Currently at 84.
How's the trend?
The trend is upwards. It's near the highs of the trend.
Okay.
But it's on an upswing right now.
Previous stuff. Right. We might be doubling up on Xerox again. Our favorite little double up. Okay, we don't have time. We're trying to finish on time. We're already a little late, whatever. How about 11? Did we guess this right? 10. Oh, we're so close. What are we not there? We're definitely not gonna. Is this 10? Yeah, okay. We're close. We're close enough, Steve. We're not gonna be too hard on ourselves. I don't really even like this is just so particular that I keep doing this. Doesn't really matter. That is particular. ELFS. What is going on? No, very interesting. No, don't like that. Don't like that at all. We're getting back into our XRX. We were out of all them. Now we're thinking about getting back in. Oh yeah, we definitely. I don't know what this is, but it's new and we hate it. Well, we like it as a short. Galapagos is one of those ones that has screwed us like literally every time. Yeah, we exited it. We're getting back in. We don't care. We don't care what anyone says. We don't like Galapagos. Nope, don't care. Not enough to double up on Xerox. UBX, we've seen a lot, but never quite because it's biotech. We've never quite. That's a nice. Not enough. Don't like that 15. We're getting the hell out of here. We got too much to do. We like this little like we like these additions. I like the 2-to-1 long short. Can you give me can you give me what net option sentiment ended at? Or sorry, QQQ and SPY what they ended the day at?
QQQ 44, SPY 56.
Done. Market update. No portfolio update now. A lot of people request access to that don't pay for the service, and I do feel bad, but we work pretty hard on this. Shout out also to all of the people that help me, like monitor the 27.33. I love it. What was I doing? What was I grabbing? Oh yeah. 10. What are we calling this? All right, done. All right. So yeah, like right when we end this, Steven, give it a delete. I'm gonna delete it on Twitter, but repost it, please.
What do you want me to cut out when I repost it?
Let's talk about that offline.
I could end the stream. You want to stay in here, or
Okay, end the stream.
do you want to answer these people's questions before we leave, or no? I think I
Yeah,
know
we
where
can
the
answer the
confusion is.
questions. Yeah, we can answer the
I think
questions.
I think I know
And
where the confusion is coming from because in the model portfolio, the top row says raw average return and it says 1.85%. And I think that's why this person's C Gmail is getting confused on like the total overall return and is looking for clarification with that.
see, like, yeah, if you're still here, are you still here? Let us know because we don't necessarily want to. Uh, so just to be clear, one more time, you're kind of doing this wrong on an ongoing basis. If you make all the trades, the raw average annualized is 56%. So in the event that we're talking about, what you are talking about is 6,000 times 1.56, which is a 56% return. So you, with $6,000 invested in our newsletter picks last year, it's easy because they were free. You would have ended the year with $9,360. You are looking at the raw average return per investment, and that is a really, really confusing way to do it because that average return is like for complicated reasons, average return is ROI, right? And if you actually look into this, like to get a raw return, you need to turn it into an annualized based on how many hold days you have. It's much easier to look at the annualized because that is already telling you what you would get if you hold it for a year. Stop looking at this number. Look at this number if you want to know the total portfolio and how much you would have earned. Because like that's like really like I would always look at annualized if you're ever trying to figure out just like the raw amount of money that you're going to make. Um, so that hopefully answers the question. Let's move on. No, no, like you get
So
the
let me
like
explain this, George. I could
yeah,
explain this, I think, easily. So, see, so if you were to hold those, the return you're seeing that's only 1.85%, it factors in the hold time, which I forget what the average. It says 26 average days hold time. So you have to factor in the time for each trade. So like when you look at the overall annualized return, then that's what George is saying. You'd be getting the 56%.
um yes, exactly. Like you keep on trying to like portion it. Like, but it's just like, no, you'd have to make all of those trades when we say we made them to get that annualized return. Like, that's the easiest way to understand. You'd have to follow the trades and like we're like if you go back and look at this, right? Like we're not holding them for a whole year. So, like, these are our hold times. So, it doesn't make sense that what you're saying that you would need to hold them for a whole year to get the returns. You would need to hold them for exactly these lengths of time, you know? But
Hope that makes
to
it
be
clear
very
for you.
clear, to be very clear, we are not, like, I will say it again, I am not recommending. I think copy trading does not work. Like, on each trade. In ag, yes, when you're talking about less, yes, you put $100 on each trade, you would make on each trade what we said, but you would end up with an annualized return on a 56%. Because you're not understanding like ROI, time value of money. Like if you make 5% per trade and you're making one trade every week, you are making a lot more than 5% on the year. How you should think about it um, is what I'm telling you, which is like you should learn our process and combine it with your own and figure out how to get smarter as an investor and incrementally grow as an investor. Like that's what you should do. You should never copy what anyone else is doing because like that doesn't really work. You're not going to get good results from that. And you could never really perfectly copy what everybody else is doing. You're better off trying to learn as an investor and get better and integrate it into however you're currently investing. Um, and okay, great. Um, are you going to answer the question? How do we get access? I'm seeing that stuff. Um, yes, that's a good job, Spiky dude. Like we can like the best thing I could ever help you with, and like people like email me individually all the time. I will help you grow it as an investor. I will help you get to know, like especially if you pay for the trading letter. Um, I will help you get to know like how to be a better investor, and I will do it on a one-on-one basis. What we will not do is give you access. Um, um, you're not see like you're just not understanding the math well enough. I will do it one more time. Let me finish this thought. Um, it's not right. I keep on explaining to you why it's not right. Um, but uh, but anyway, like you've got to subscribe to the trading letter if you want to get access to the model portfolio. That's how you get access. We can post um, a link to the letter I just made. Like if you subscribe to the trading letter, I will add you for access to the model portfolio and you will get access to everything that we're doing. Um, you're just like not understanding a very like I would say difficult concept, which is time value of money, right? So like we'll do it this way is the easiest thing. Like each of these investments that we made have a raw average return of 3.6. Now, if you want to know your annualized return, you need to know how many days that position was held for. So I don't know what kind of math you're doing, but like I doubt you really understand how to make an ROI calculation. This is not necessarily a very easy calculation to make. This is how you turn a return into an annualized return. Like what you can understand is like very clearly if you made these 154 investments exactly when we made them, which to be clear, we are not recommending, like, then your $6,000 would have a 56% return and you would have $9,360. Like, I would just recommend, like, you keep, sorry, I'm not trying to be impatient, but I am trying, like, I like to properly convey risk. And what I don't like that you're doing is you continue to try and do math that you do not understand. Like, do not try to do math that you don't understand. Try to understand the simpler math, like how to take an annualized return and figure out how much you've made on a yearly basis. Like, until you actually like understand that that is the right way to do it, you shouldn't be looking at individual investments and trying to calculate an annualized return. You're going to confuse yourself more and potentially make mistakes and not understand things. And if I can convey one thing, like what is really important is like, yes, don't try to do math you don't understand. Don't try to copy strategies you don't fully understand. Like, do things you understand first. Try to tackle like smaller, less complex problems before you try to tackle more complex problems.
I think, Gmail, you should just stick
I
around
am just
and
like, yeah, I couldn't be any like I will do it one more time. I couldn't really be any clearer on how I'm doing this. You could look in this cell, right? You're taking $6,000, you're multiplying it by 1.56% because when you're getting a 56% return, you are actually getting a like a 1 plus 56% return. That's how you get 1.56. You're taking $6,000, you're making these 154 investments, and you're getting a 50% annualized return. You are getting $9,360. If you don't understand that, please tell me what specifically you don't understand about that. Like, because I can't make it any simpler than that. Okay. I've got to go. I'm
hold
sorry I
on one
got a little
second, George.
frustrated.
I'm gonna end the stream right now. But see Gmail, I think you should stick around. We provide value for you. So like if you're around long enough, I think you'll see the value that
Back,
Prospero
ask this
adds.
question more. Yeah, like Steven and I end the stream, but we're happy to like keep asking. You can ask it in the comments even, and we can do it for everyone in the comments. But wait for us to repost the video.
Yes. Okay, we'll see everybody back Monday. I'm gonna end the stream right now. See you guys.